Yo, what's up? What's going on, guys? It's your boy Conquer FX, and welcome to my YouTube channel, guys. I really appreciate you watching this video. So, if you're new to the channel, I'd like you to subscribe, hit the like button on this video, and click on the notification bell to get notified when I release new content. So, guys, in this YouTube channel, I will be sharing information with you guys on how to trade smart money concepts because I do use smart money concepts and it has really improved my trading. So I am here to share that exact same knowledge so that you guys can improve on your trading skills. So yeah, guys, and on today's video, I'll be talking about how to trade indices or indices with a small account. So I'll be showing you how to read the market, how to execute your trades. So yeah, guys, that's today's video. Let's get into it. Okay, so guys, firstly I would like to highlight on the mistakes that people usually do when they are trading indices. Indices are highly volatile, so it's it's really a high risk to trade indices if you have a small account. But there are ways in which you can capitalize on it or take advantage on it, whereby you can flip that 1k to 5k, whatever amount you want to take it to. So yeah, guys, first thing is I see most traders they know how to predict direction, but the problem is usually the entries. Somebody would enter in the market, small pullback on NASDAQ or US30, and just like that you are simply taken out of the trade. Account blown or your stop loss has been hit. But yeah, guys, I'm going to share concepts which will definitely help you to improve on your trading in NASDAQ and US30, especially when it comes to execution, when to click that buy or sell button. So yeah, guys, let's get into it. First step is identifying a trend. As a trader, you should be able to identify your trend. You should be aware whether you're in a downtrend, uptrend, or you're in a ranging market, because we all know that once you're in an uptrend, you want to get involved in the buys. If you're in a downtrend, you want to get involved in the sells. Ranging market, I'm not much of a ranging market trader. I like catching big moves to the downside or upside. So yeah, guys, basically, if you are not good at identifying or you're not good at reading market structure, I do have a video on the channel which will help you on how to improve your reading of the market structure. I do the title of the video is the ABCs of market structure. So guys, firstly, we do identify a trend. As you can tell right over here, we are in an uptrend, and right over here we are in a downtrend. So yeah, guys, these are the simple things that you do, and you might take this lightly, but you don't realize how important it is to actually like mark out your levels, your levels or your structure, identifying your structure. This is so important because most traders get caught on the wrong side of the market. You'll find yourself looking for buys in a downtrend, and then you execute your trade, price goes the right way for a while, but since you are in a downtrend, you will get stopped out and lose your account or lose money. So yeah, guys, that's how you identify structure. It's that simple. And so now I'm going to talk about the next thing, which is supply and demand zones and order blocks. So basically, what do I mean by supply and demand zones? I'm talking about levels that break structure, levels whereby we have crazy impulsive moves to the upside or the downside. And that is just an indication that there are a lot of buyers or sellers in that level. So what I'm talking about is I'm talking about something like this. Maybe you have an uptrend and then price is going up, and out of the blue you have this, and then whoop, market shoots to the upside, So as market shoots to the upside, right over here, this is your level of demand, because one, it has broken structure, it has broken the previous structure. Two, it is the impulsive move to the upside. So now you can see price comes back into these levels, because before the market continues to go up, price will 80% out of the time will come back to retest on the demand zone, and after touching that demand zone, price will just retest and shoot up. So this is just a simple illustration of how a demand zone looks like, or how a demand zone works. So yeah, let me just quickly show you an example on a downtrend. When we have a downtrend, market is going down nicely, and out of the blue we have that level, and market just moves rapidly, breaking structure. Price will come back and retest and then continue moving, just like in an uptrend. This would be your level of supply, whereby there are a lot of sellers in this zone, hence market moved so rapidly, breaking structure. Price comes back and retests on the supply zone, and then it moves out. So yeah guys, let me just show you that on the actual chart. So I'll start with a supply zone. So as you can see, what I said was, we identify structure, we are in a down market, bearish market. And right over here, if you can just look at it, you have this impulsive move to the downside, breaking structure, and by structure I mean breaking our previous low. So right over here, we've broken our previous low, and like I said, price retraces back to that zone, taps in and moves. The first time it didn't move crazy impulsively, but it does have a retest and price just drops. And we all know that when trading indices, this job could give you a good amount of money. So let's just quickly go look at a demand zone. In our demand zone, right over here, this is our demand zone. As you can see, price gets there and then moves to the upside crazy, breaking this structure point. Maybe on a lower time frame, this is a high, this is what we'd consider high, and price has broken that high to the upside, and then it comes back, retests and moves. So what I want to show you guys is that, watch how when price just steps into this level of supply and demand, it just taps in and then it shoots up. And we all want to get involved in those levels whereby price gets there and it just has massive movement. Your trades hardly go into loss, and you are able to minimize your risk. You're able to minimize your risk, meaning you're risking at least 10% of your account, unlike any other strategy which will force you to risk 50% of your account. So yeah guys, I hope you understood the concept of supply and demand. So basically, supply is sell, demand is buy. And what I said is, levels of supply and demand, they break structure and they have crazy impulsive movements. Now at first this might be a bit confusing, but as you keep on watching this video, watch it maybe 2 times or 3 times to get the understanding of what I'm talking about when I'm talking about supply and demand. So yeah guys, so now I want to show you I don't know if I should call it the strategy or the way in which you should get into the market. So right over here guys, we have our level of demand right over here, né? So what I want you to do is, in a level of demand, you look for that last bearish candlestick before price moves up, and that is your level of demand. That is the zone that you are going to mark out. That is the level that you are marking out. So it will be this last candlestick right over here. What you do afterwards, price would obviously get here, and then shoot up, breaking structure. Once you start seeing price retracing, then what I want you to do is you take your Fibonacci tool, and you mark out top to bottom. After marking out the top to bottom, then you will just highlight yourself 50% of the order block. So basically the middle of the order block. After you've marked out the middle of the order block, when it will depend on you as a trader. If you want to get involved immediately when price taps in, it's okay. But what I strongly advise is that you wait for price to get to the 50% level of your level of demand. Hence, you know that if I enter right over here, even though price does retrace further into our order block, you are not caught out in a red screen. So basically, you are in the negatives. A lot of people, you know how you get when like you see a red screen, so you just want to avoid seeing red screen. So how we do that is you mark out the 50% zone. Immediately when price gets there, it's either you set a limit or you take the trade. And the nice thing about this, you are risking so much less, because the concept of using supplies and demand is that price gets to the level of supply and demand and it immediately shoots out. Immediately it's going to shoot out, and you know that if price, not always guys, that the levels of supply will hold the market. Sometimes you find that the market will just get here and then just keep on going down, even though it does keep on going down, but you have risked only 10% of your account, because this movement, when your entry is right over here at level 11465.6 and your stop loss is hit, you've only risked 10% of your account, which gives you the ability to continue trading, look for other trading opportunities. Unlike a strategy whereby you'll be forced to enter maybe when the market is right over here, you enter your buys only to find that the level of supply and demand doesn't hold. By the time it hits your stop loss, your account is blown. So that's the beauty of using supply and demand zones, is that you minimize your risk, and it is overall just a good trading strategy which you can use. And I believe even today, we did use right over here, right over here. Um, See, we have highs right over here. So basically, this was the highest point on the 15-minute chart. And then price got to this level and just shot up. Like I said, now you mark out the last bearish candlestick. You mark out the last bearish candlestick and take your Fibonacci and you mark out that 50% zone, and you just wait for price to come back into the demand zone. See, price tapped in, we got triggered in this trade and it shot up. And we did take another trade on GBP JPY using the very same strategy, supply and demand. So guys, I'm just showing you that this strategy works. It works beautifully, and it helps you to minimize your risk. You are able to capitalize on the big moves. You'll be catching the big moves, guys. And for a bearish example, I think I will go to US30. Oh yeah, look at that. You see, guys, this is what I'm talking about. This is what I'm talking about. Now, as you keep on applying the strategy, you'll be able to figure out how to use it on multiple time frames. But I will be releasing more videos to help you guys understand using the strategy on multiple time frames. I'll be going deep into order blocks, what are order blocks, and other certain things, you know. So right over here, price did not break structure. As you can see, this was our previous low. We did not break structure, but right over here we had our last bearish candlestick. Let me just go to the 5 minute. We had our last bullish candlestick before price just impulsed to the downside. There are two criteria, which is impulsive move and breaking of structure. We only had one. It is great if you enter when you're you have when you see the two criteria, which is break of structure and the impulsive move. But here, because I've been using the strategy for quite a while, I knew that how should I approach and how should I execute. See right over here, this was basically on the 30 and 15-minute chart. This was the last bearish candlestick before price dropped, and then price did go down to these levels. As soon as it came back up, this was not a one of the best trades, but I am still risking much less than I should. The initial entry at the 50% of our supply zone, we missed because I was in class, guys. I was in class. I was in class. Yeah, I'm looking to make more money and then drop out. So yeah, guys. I was in class. We missed right over here, but I did set an alert on my trading view, so I got the email. When I got the email, I entered right over here, targeting our next lows because I couldn't monitor the trade. We were in class. I did manage to secure a few pips right to the downside. So guys, I want you to watch this video at least 2 times or 3 times and understand how much less you are risking with your trades. You are risking way much less than usual strategies, guys. You are risking way much less than the usual. So yeah, guys, basically that is the strategy. So let us just have a quick recap. It's identifying your market direction. You identify market direction, and after identifying market direction, we look at our levels of supply and demand. Now, they do not appear almost everywhere or every time, but when they do appear, they are 80% accurate, guys. So I want you to keep on working on the strategy, use it on a demo account, backtest for a while, and I'm telling you guys, the strategy definitely works. It gives out beautiful trades. So right over here on Nasdaq, I am expecting price. Right over here, we had a crazy impulsive move after this candlestick. After this bearish candlestick, we had a crazy impulsive move to the upside. So what I'm waiting for, like I told you, I would mark out, let's just go to the 30-minute chart. Okay, so I'd mark out this whole zone as my level of demand, guys. As my level of demand, I take my Fibonacci and I just look for the 50% level of this demand zone, which is right over here. And once price gets to these levels, you see right now, we could have downwards movement coming like this. And then once price gets to these levels, I'll be looking to take the trade and hopefully price will shoot to the upside. Now, I'm not saying the strategy is a 100% strategy. No strategy is 100%. But if you master the strategy and set rules around the strategy, you will lose less money and you will make more money. So yeah, guys, this is just a quick setup which you can look into for Nasdaq this coming week. So yeah, guys, thank you very much for watching this video. And when testing out the strategy, I want you to take screenshots, so that you'll be able to see where does the strategy work best, and educate yourself a bit more about the strategy. Don't wait for me to release another video. Just do it yourself, put in the hard work, and it will definitely pay off. You can use this application right over here. This is Notion. Take screenshots, you can write down your notes and everything. So this is the trade that I was telling you about in GBP JPY. This was an early trade I took in the London session today. It was a nice move to the upside and it was nice and short. It was basically a scalp. So this was the before analysis, and I was risking way less, way less. And once you start using this strategy, you realize that you can increase your lot size and still not increase your risk, allowing you to make even more money. So yeah guys, use this application. It's Notion. This is how the trade went today, but this was not on Nasdaq, but it works the same way on Nasdaq. So yeah guys, thank you for watching this video. If you found this video educational, please drop a like on this video, comment if you've got anything to say, and thank you very much guys.